us acknowledge the Indigenous people of all the lands that we're on today. From coast to coast to coast, we acknowledge the ancestral and unceded territory that are the Inuit, the Métis, and the First Nation people that call this land home. Now let's welcome our preferred partner, Lora. Is it Behm, Lora?
Yep, you got it right.
Good, because
Yep.
that's what I've been calling you. So, and if you need help renovating your home to age in place to top up your monthly income or support family members with their purchases, she can help. And today she's going to be talking specifically about mortgage renewals, but I'm sure she would answer other questions as well. Hi,
I
Laura.
will.
Nice to
So
see you.
just give me a second to share screen.
Just to mention to everybody, this is being recorded, but yourself will not be recorded, just Laura and myself. And hello, people watching in the future.
Just give me one sec to, you guys can see my screen, right?
Yep.
Can you watch the chat for me, Jen, if there's any
I
questions
will.
that come up? Okay, perfect. Hi, everybody. Thanks for joining. My name's Lora Behm. I am a partner with Jen and Art Your Service. I've done one of these sessions before that focus more on financing for seniors. This one I wanted to talk about mortgage renewal. So very hot topic right now, as Bethan was sort of chatting about earlier. Obviously, mortgage rates are quite high right now, so getting a lot of questions. So I thought that this would be a good starting point to have this session with. But to Jen's point, if you have any questions or concerns that I haven't talked about here, please just jump in and ask. So who am I? I'm a mortgage agent here in Durham region, but I am able to work across Ontario, and we do have partners in the other provinces on our team. I am part of Mortgage Architects, which is a part of Dominion Lending Centers, which you might have heard of before. Jen and I were also talking about a recent trip. I really wish I could travel as my full-time job, but unfortunately finances do not allow. So here I am as a mortgage agent. We do have access to kind of everyone will say this if they're a mortgage agent over 50 lenders. There's probably 10 that you care about. So we do work with the big banks, Scotia, TD, to name a couple. Credit unions, for those of you in Ontario, I've listed Duca and Meridian here. And then also the monoline lenders, which are companies that just deal with mortgages. So First National, MCAP might be ones that you've heard of. And just because this group is on the phone as well, we do also work with a number of reverse mortgage providers as well. So as people's mortgages renewals come up, and I've seen a huge influx in renewals this year coming to my plate as opposed to being renewed with the banks, I think what people are finding is that the banks are not offering the best rates or terms initially out of the gate. And while previously people were like, oh, I'm just going to stay with my bank. I've been with them for 20, 30, I've even heard 40 years. Now they're kind of exploring other options for renewal options with different lenders. So just wanted to kind of, I again have been talking to people that have never switched lenders. So there's a lot of questions that come up. So wanted to take you through those today. But the most common thing we hear in the past is I just took the renewal offer I was offered. So I didn't talk to the bank, I just signed back, or sometimes I didn't even sign back and they put me into a new term. But what we want to encourage you to think about is like, is that the best option for you? Should you have made any changes at the same time? Because I have seen as well people just renewing and it might have been a better option for them to actually make changes. And then maybe you actually need some money to pay off some debt or do a renovation. Maybe you want to go on a trip. These are your kind of inflection points or times for you to think through that. So here's what you need to know about the end of your mortgage term. The first is you can do anything you want at the end of that mortgage term. So you are free from that lender at that point to make any changes you want. You can put a big lump sum down, you can pay off the mortgage, you can move lenders, you can change terms. So one of the big things we're seeing done differently right now is a lot of people are taking a 3-year term instead of the common 5-year term, which is what we would have seen in the past. Hey, maybe you won the lottery and you want to pay off the whole mortgage. That's also an option of something you can do at renewal. It's basically your time to make any changes without any penalty to the lender or to you. You do have three options. So the first is you can just stay with your current lender. So whatever lender you're with today, and I am getting asked this question a lot because people's financial situations have changed and maybe you know that the lender may not renew you had they known about your circumstances. So maybe you've been laid off from a job, or you have recently retired and aren't making as much money as you were before. Providing you have no issues with your current mortgage and you've been paying it on time, lenders will renew you. So not a concern that if your financial situation has changed, they don't really know that. And as long as you've been paying and your mortgage is in good standing, they will renew. You can switch to a new lender. So a switch is when you're taking like the exact balance that you owe and moving it over to another lender. Or you can refinance. So if you need a little bit more money to do kind of any of those things that I talked about, or anything really, a refinance is the third option for you. I'm going to go through each of those. If you have any questions, just either put something in the chat or just ask your question out loud. So the first is if you're renewing, this one's pretty easy. You can just take the renewal offer from your lender. The benefits here, you don't need to requalify. You just sign the paper that the bank gives you. You don't need to provide any documentation, so no income, no credit, things like that. And there are typically no fees or charges. So if you are with like a standard bank, they will renew you with no fees or charges. If you're with what's called a B lender, there may be a small admin fee, but with a traditional bank, there would be no fees. Let me know if you have any questions, but that's kind of a renewal option that in the past, a lot of people have been taking. What I'm seeing now, as I mentioned, is those banks are not offering the best rates out of the gate, which a lot of people are then asking questions. So I had a client actually come to me today. Her renewal is next month, and she was being offered in the high sixes. I think it was 6.97 for a 3-year term, when really we can get low fives right now. So what that bank is expecting is she's just going to sign on the piece of paper, not look into a renewal offer. So that's one of the reasons she's exploring her other options. So you can traditionally get lower rates than what you're being offered, just as I just mentioned that exact example. You can select from a variety of lenders. You do need to provide documents, so they need to be able to confirm that you can pay the mortgage. However, especially for some of these folks on the call where you may be retired, there are other ways to qualify other than income. And a lot of people think that once you're retired, you can't switch lenders or you can't get any new financing, and that's not the case. And as long as your mortgage term is 3 years or more, all of your costs will be covered to switch. So there will be no costs in order to move to a new lender. So a lot of banks like to tell people, oh, they're going to charge you to move, or there's going to be a lot of out of pocket fees, and that's not the case. Here are some changes that you can make during a switch. So while normally it's just moving your balance over, here are some of the changes you can make. You can add a line of credit. So if you need a secured home equity line of credit, there are lenders where we can add one at the same time and it's still considered a switch. You can increase your amortization. So given the price of everything right now, as everyone knows, I can't even leave the grocery store without paying a couple $100, I find. If you want the ability to have your payments lowered, how you do that is by increasing your amortization. So with some lenders, we can make that change on a switch. You can remove someone from title. So let's say, and this could work the other way too. I see a lot of grandparents or parents helping co-sign. On renewals, we can actually take those parents off if the person qualifies on their own. And let's say you already have a home equity line of credit, we can roll that into your mortgage balance at the same time. So you're getting that lower interest rate and then also kind of being forced to pay that off as well. So those are some of the changes you can make with a switch. Refinance. So again, you can do a refinance at renewal, no penalty. Again, you can select from a number of different lenders. You still need to provide those documentation, and there are some options where you can actually get your costs covered. So again, depending on the lender who you're moving to, there may also still be the option to have no costs associated with moving, and they're fairly painless. So what could a refinance look like? So we have a lot of people right now that are carrying money on credit cards or lines of credit. Again, it's just so expensive out there right now. So here is an option where I had a client up for renewal. They were paying a 2.89% interest rate and they had a mortgage balance of 474. They also had a credit card of $25,000, which obviously with a really high payment, we all know what those interest rates are on cards. The renewal option they were given was 4.79, with which brought their payment to 26.15, and they still continued to have that credit card payment of 396 in it. So their total payments would have been 3,011. We actually were able to refinance that credit card debt in, and we actually dropped their payments to 2403. So a savings of $200 from their current payments. A savings of almost $600 if you included that credit card debt. And they actually wanted a little bit of extra funds to finish up a small reno in their house. So we were able to do all of that with a refinance for them. One common question I get from people is, will I need an appraisal if I'm switching or refinancing? If you have a small mortgage balance compared to the value of your house, so let's say you have a $150,000 mortgage and your value of your house is 700,000, most likely that will pass what's called an automated valuation system, which basically the bank says, I agree this house is worth 700,000. I don't need someone to come in and look at it. In some cases, as I mentioned, even if one was required, it would be paid for by the lender you're switching to. They are fairly small and they're not coming in to talk about someone's like cleanliness of their house or if you have a lot of clutter around. They don't care about that. They're simply trying to confirm that the value of the house is there. I get a lot of people saying to me, do I need to have a cleaner come in or do I need to clean up? And you don't. They're just coming to confirm the value of the house. Another question. So I talked here that a lot of the options to have the costs covered are included, so no cost to switch. But what happens if you don't have the costs covered? As I just mentioned, if an appraisal is required, they're kind of in the $250 to $500 range, depending on the property. And then we do have an option that if the legal fees are not covered, there's a flat rate option of $825 to have those covered. And you can include that in the balance of your mortgage. So you don't have to pay that out of pocket. You are able to include that in the balance of your new mortgage. Any questions so far from anyone?
Not in the chat. Feel free to unmute if you do have something, guys. I think we're okay so far.
Okay, cool. So things to think about when your mortgage is up for renewal. So have you had any major changes in your life since your last renewal? Has your income changed? Do you potentially want to put more money down? Maybe you're struggling with those monthly payments, as I just mentioned, and you want to find a way to bring your mortgage payments down. Big thing to consider, and this is one that I see people constantly making a mistake over. Please think about what's happening in your life in the next 5 years. Are you planning to move? Are you planning to upsize? Are you planning to downsize? Are you planning to retire soon? So I have people as an example that are looking to renew, and they came to me last week and they said, we've been offered a 5-year term by the bank. Can you beat it? Because a lot of people just want to know kind of what are the rate options. And when I started talking to her, he found out that she was planning to move in the next couple years, and the mortgage she was about to take with the bank would not have been able to be ported to her new property. So she would have had a really big penalty had she taken that 5-year fixed option that she was offered by the bank. So always important to think about what's going to change in the next 5 years. We obviously don't always know everything, but if you do know a big life event is going to happen or you are considering moving, we want to make sure you're going to be put in the right product. Maybe you need some extra funds coming up to do a renovation. I was talking to Jen earlier that I'm doing a big reno in my house, so I need to do planning ahead so that I can get access to those funds to actually pay for it. Maybe you've got kids going to school or you've got a big debt that's coming up that needs to be repaid. All of these questions are questions you want to ask yourself. So what are our recommendations for renewals in 2024? So as I mentioned earlier, we are strongly recommending that you do not take a 5-year fixed. The reason for that is, and we're thinking more 2 to 3 year terms. Three is definitely the most common. I would say kind of 90% of everything I'm doing right now is a 3-year term. The point with that is, well, the interest rate can potentially be a tiny bit higher than a 5-year fixed. What we're hoping is in 3 years, when the mortgage rates hopefully are coming down quite significantly from now, you'll be able to renew into a lower rate at that time, and you'll have saved money over the length of that term. I would also say now is kind of the industry would say that who knows what they're doing in 5 years, right? It's very hard to plan that far ahead. So I think 3 years is generally going to be a term that people are considering going forward. Um, and as I mentioned with that lady earlier that I gave the example of, 5-year terms have a significantly higher risk to a larger penalty if you do end up canceling. And canceling can also mean refinancing, right? So if in 2 years you needed some money for something and you needed to refinance, you'd have a larger penalty option than if you were in a 3-year term and then needed to cancel. When should you start working on your renewal? We can start working 10 months out. I'm sure no one really wants to start working on their mortgage renewal 10 months out, but in most cases it's 5. So if you have a renewal between now and September, you actually should be working on that now. And while we are coming into what we hope will be a decreasing rate environment, we actually did see the rates rise last week. So unfortunately, the US inflation numbers were a lot stronger than everyone was anticipating. So we did actually see rates rise last week by 0.2. A lot of people think those Bank of Canada meetings, which we had one a couple of weeks ago, where they decided to hold the rates, that they don't influence fixed rates, but they actually, sorry, that they influence all rates. They don't, unfortunately. They only impact variable rates. So very shortly after when the US and Canada announced the inflation rates, which both had gone up, we actually saw the fixed interest rates rise as well. So you want to try to be getting in and at least making sure that you're locked into a lower rate. So if they do raise between now and September, you're protected. But also if they go down, you still are able to get a lower rate between now and September if they do go down. So you're not locked into anything if you start working this far out. So key takeaways, another thing I'm seeing people is because of all of this communication in the media about how high rates are and how many people's payments are increasing, I have a lot of people that are putting them off as long as possible because they don't want to kind of see what the potential impacts are for them. But some people are, I definitely don't want to go far to say pleasantly surprised, but when I run some renewal options for them, which is just a straight up renewal, that it's not as bad as you think. So just because your rate's gone up from, let's say, 3% to 5, it doesn't mean that your payments are going to double. That's not how it works. And a lot of people, when we do run them, say, oh, it's not actually as bad as I thought it was going to be. And my advice is free. So if you do have a renewal option that you want to double check with me to say, is this the best option available? I will tell you before making you go through all of the rigmarole. I don't do that to clients. So if I know I had someone today, I told her just to take the renewal offer she was being offered. I didn't ask her for any income documents, didn't make her fill out an application just because I knew that that was the best rate for her. And also after talking to her about her situation, was also the best rate option for her. So if you do have any questions or want a second look, let me know. And please don't take the first offer that you receive. Another big thing about banks that people don't realize, and it's actually not just banks, it's all lenders. If you sign that renewal offer, it actually takes effect immediately. So if you have one of those really great low rates, let's say from COVID, and you're in the ones or low twos, if you sign a renewal offer, it goes into effect right away, which means you've lost that lower rate between now and when your renewal was actually due. So you want to delay putting off that renewal. They will try to tell you or give you pressure tactics that you need to sign right away, or this offer is only good for the next week. The rates are going down. They will compete if they need to. So don't feel pressure to take that rate right away. My contact information is here, and I think I'm also listed as well as one of the partners with Jen and team. But if you do have any questions or concerns, my number's there. And like I said, I'm happy to offer a second look, and you don't have to go through a whole bunch of information before chatting with me. So I'll
Awesome.
pop
And
this in.
that was also, I've also put it in the chat, guys, if you guys
Oh,
want to
thanks.
touch with her that way, or you can send me an email if if you've lost any of that, and I will send you Laura's stuff. Laura, there is a question in the chat, and this is from
Okay.
Christine. She says, can I be denied a mortgage with my current carrier when my mortgage comes due, even though I've paid all my payments, as I don't have the same income as I did before due to retirement?
Yep, they will provide you a renewal offer. And to your point, as long as you've been making those payments and you're in good standing, they should just provide you a renewal offer and you can sign it and sign it back if you need or want
Okay,
to, I guess is the thing. But yeah, usually they'll just give you a renewal offer as long as your mortgage is in good standing.
awesome. Now, I know a lot of people are frightened about the stress tests.
Hmm.
So when would you have to do that? If it was a completely other bank? Or will they take in consideration that you've already had all payments were all in good faith?
It
Kind of.
does depend on what type of mortgage you have, which is really hard to explain to the group. If you had a mortgage pre-2016 or you had an insured mortgage, which means you had less than 20% down, you actually don't have to qualify with the stress test. It's not applicable to you. And I would say as well, a lot of people, just because of the fear that everyone is bringing up when we talk about renewals and mortgages right now, is sometimes you can still pass the stress test. Like I have clients that we have ways to qualify you if you have like assets in the bank. If your mortgage is fairly low, sometimes it actually you even pass the stress test if you needed to. But yeah, there are ways to not have to pass the stress test. We also have other programs that are, as long as you have a lot of equity in your house, so more than 35 to 50% equity in your house. We have lots of options available for you there too that you don't need to necessarily qualify with the stress test.
Okay. I think that's Christina. I'm not sure if that answered your question. So she had a follow-up question to that was, would a new provider need me to go through the whole application process?
So application process, yes, because they can't just say like, oh, Christine has a mortgage, therefore she should get a new mortgage. So yes, there is a process to make sure that you can get one with the new lender. I try to make it fairly painless for you. And we try to ask for like the least amount of documents and things like that. But yes, unfortunately, you do need to prove within, again, it depends on the lender or your situation that you can afford the mortgage, not necessarily the stress test though.
Okay. She says, thank you. Is there any other questions? Feel free to unmute if you don't want to put something in the chat. Anyone? Oh, one new message. What rate would a HELOC, HELOC generally be
Mhm.
priced at?
So that's a home equity line of credit. And just for those of you that don't know what it is it's a line of credit that's actually secured against your house. So as a result, you get lower interest rates because the bank has basically secured it against your house. And not to be too dramatic, but if you don't pay, they can come after your house, but just like they could with a mortgage. Um, Typically, everyone is at prime plus 0.5. So that's kind of the industry norm is the Bank of Canada rate, which is currently 7.2, plus 5.5, sorry. So 7.7. We do have options depending on a number of circumstances. I was able to get prime the other day for someone, so just that 7.2, and then 7 point or a plus 0.25 is kind of the range of normal. I have been seeing some people that are in the eights, and I would definitely recommend that you look to a different provider because those are quite high rates compared to what's available out there.
Okay. Does that help, Anne? Okay. Any other questions? I think Laura would be happy to answer other questions if it wasn't. Christine, did you have another question?
Yes, if that's okay.
Of course.
Thanks very much, Laura. Do you find or do you think that we're going to see a real increase in people who have to renew their mortgages that are retired or further along and they may have a little bit left that they might be real have to they have to really struggle with this.
Yeah, absolutely, for sure. I think what I'm finding more is it's that they've taken on consumer debt, credit cards, lines of credit, things like that, to be able to live and pay things that combined with the mortgage is causing them the stress. So yes, I am definitely seeing that where I sit, especially because pensions and things like that aren't rising at the same rate everything else is rising out there. So they're just the income isn't there to support what it takes to live. Unfortunately, it's very sad.
Yes, yes, thank you very much. Like, what would be the ideal mortgage? Like, say, for example, I've got one property, I've got um, it's all like over 50% of it's paid off.
Mhm.
Is that a good way to have it?
Yeah, I mean, as much as I think it depends on what your income sources are going to be after retirement. Because you have to take that into consideration for sure. Or like if you have a rental property that you're using like some of that income to pay it down. Um, and again, what's the plan to be able to continually pay it off? Like, will you be able to pay that mortgage off over your time period once you've retired? There are different things we can do if you do own more than one property to put it more on the rental, less on your owner occupied. But it's not a kind of black and white answer because it really depends on the people's situations. Like I'm doing one for a gentleman that's retired, brace yourselves, it's a $740,000 line of credit, but he's buying land. So he's buying land, he's going to build, and then the intent is to sell a property off. So other people, they wouldn't be able to afford that, but with that strategy, it made sense. Versus I see other people that are struggling that they have all of their mortgage on a line of credit right now, and that increase in rates over the past couple of years is really causing them some heartache.
Mm. Yeah, I can see there's lots of different problems going on or
Mhm.
challenges.
Totally. Or someone's been disabled, like they aren't able to work right now. They thought they still would be working, or someone was laid off and put into early retirement. There's just so many variables out there. It does depend on the person's situation.
The other thing
And
I was wondering, Laura, is the people always talk about if the bubble bursts. What does that mean to you if you have if your house is appraised at a certain amount?
So we are, ironically, I would say we are seeing some of that right now, which I will explain. So during COVID, the housing prices went, I'll
Bananas.
use, depending where you are, went bananas,
Yep.
astronomical. And a lot of times people were paying like way over ask in order to just be able to get our property. I had other clients that like couldn't take put a condition of home inspection on just because you weren't going to win. Like if you weren't going to win during COVID, and some of them ended up buying lemons. What we are finding right now that what has ended up happening is because they bought for so high, there are times during either the renewal process or refinance process, or I have other clients that are now trying to sell houses they bought during COVID. They aren't this, they're lower than the price that they paid for it.
Mm.
So I think definitely we're already for sure seeing that. And there are other people as well that you're only able to refinance up to 80% of the value. If people need to refinance, but that 80% of the value doesn't even cover your existing mortgage, you can't refinance because you don't have enough equity in that house. So I think we are seeing that with houses bought during COVID. I don't think as the norm, if that would be the right wording. In normal times, like right now, we're kind of back to a normal balanced-ish market. I think you're paying kind of, you're not going to get into that bubble, but I do think during COVID, people overpaid. And if you're not holding on to that house or not, or needing to refinance, I think you're running into that.
Right. That makes sense.
Yeah.
Okay. Any other questions, guys?
I have one more, if I may.
Of course.
Um, the I currently with a provider that I was very fortunate that when I needed to, I had my mortgages on a line of credit, and I took mortgages within my line of credit, and I got two very, very good rates, and it's coming due up in 2025. So
Mhm.
I'm really happy about that. But are there many providers that do allow you to do that?
Yeah, so I'm assuming you're like with Manulife or Scotia, one of those.
Yeah, Manulife.
Yeah. Yeah, so there are a bunch of lenders that have what's called I like to call or explain it like it's like a pie. So what they do is they give you this like large global limit. So they say, hey, Jen, we're going to give you access to up to $500,000, and then Jen can split the pie however much she wants. So she can have $100,000 on a line of credit. She can have some just sitting there. Anyways, you can do a variety of different options. So there are a number of lenders that do that. And actually, I have had clients use those products to help family members buy houses. So I had a gentleman who had his own mortgage. And then within, just like you're talking about, he actually had one for each of his kids that he'd lent them some down payment for. And each kid was responsible for whatever component of the mortgage they borrowed their down payment from. So yeah, there are a bunch of options out there for that.
Well, that's yeah, well, because it does work, I mean, it worked for me, but
Mhm.
it's and what do you think too about like, when people have bought homes that were like out of sight, the amount of money that they paid. So we're going to see a lot of homes being taken back by the bank.
Is that my question for me?
Well, I'm okay. So the question is, how do those, what's foreclosures, for example, how do they impact if somebody went to buy one, for example?
Great question. So I will start the answer by saying it's proven, like it's proven by whoever those people are that prove things, that the last things kind of Canadians will do is let their house go into foreclosure. So you will like default on your credit cards, your lines of credit, money that you owe people before you do on your house at that last piece. That being said, we are seeing a rise in them. I wouldn't say like this dramatic increase of all of a sudden all these houses are up for sale, but I've had a couple people this past month in property tax arrears so high that the house is actually being taken over by the municipality to sell the house. A lot of people don't know that. Like if your property taxes go that far in arrears, the municipality can sell your house. And we have had a number of foreclosures as well with different people. If you're trying to buy a foreclosure property, a couple of things I will tell you about it, just to answer your question, is usually the process for getting your offer reviewed is a little longer because it has to go to a bank to actually be approved. It's not just a seller that's saying, well, you can, like, I agree to accept this price. And then the other thing is usually you need a full appraisal on the house, which may not be an issue, only because the person selling it, which in this case it would be the bank, can't actually attest to anything in the property because they don't live there. So the second piece would be is that all lenders would need an appraisal. But other than that, I can't think of anything off the top of my head that would be different from the ones that we've done. If you're purchasing a foreclosure property, you can unfortunately usually get them for a better deal because the bank's just out to get their money that's owed to them. They're not really looking to actually make sure the person ends up with anything depending on the situation, unfortunately.
Okay, if someone was considering a reverse mortgage, would it be better to wait? What would be a typical rate for one right now?
Um, so two things, and ironically, it has to do with Chris, not necessarily the product that Christine's in, but there is one step before a reverse mortgage that I do recommend. So just to take one step back for those of you that aren't familiar with reverse mortgages, they're actually a mortgage that is used to you can do anything you want with the money from the mortgage. You can pay off an existing lender, you can take some money to invest, you can go on a trip, you can do a reno. So it's basically money that you've acquired from your house, and you aren't required to make payments on it. So what happens is every month that you don't make a payment, I'll come back to that in a second. Basically, whatever money you owed gets added to the balance. As opposed to a normal mortgage, you make a payment every month and your balance slowly goes down. I do normally recommend that we check first to see if you're an option for what's called a Manulife One product. In that case, you can actually use the line of credit to pay for the mortgage. So basically, every month the line of credit can be used to pay the mortgage. that is a lower cost option. So I try that one first before we go into a true reverse mortgage product. And if for some reason that doesn't work, again, I would go into a traditional reverse mortgage product. Again, with them, we're recommending like the 2 to 3 years for the same reason that in a few years you can renew and be at those lower interest rates. Those are kind of in the sevens, depending on kind of the lender that you're looking at and the term that you're looking at. The one thing I will say about those, because they are becoming a little more prevalent, partly Christine's point about like it's hard to live right now and a lot of people are retiring with mortgages. You can make interest only payments on those. So meaning if you borrowed 400,000 and you just want to pay the interest, so no money down, you can do that. So that what'll end up happening is when the mortgage term is up, just like a normal mortgage, your balance will stay the same because you've been paying off the interest that whole time. So it just allows you a bit of flexibility that if you have some money, you can put it down every month. You don't have to pay all of the interest, but at least you're kind of managing that balance on the mortgage. And when it's due, like same thing we just talked about today with renewals, if that mortgage is up for renewal, you're allowed to get out of it. You don't have to stay with a reverse mortgage. Like once you're in, you don't have to stay in. And they also, the other point I'll make about reverse mortgages is they also have a line of credit option. So you don't have to take all of the money at once. So let's say you had a mortgage of $100,000, you didn't want to pay that anymore for kind of the reasons I just mentioned. You can get a line of credit as well that you can take from it as you need it. So I had a couple last year that needed to do some home renovation. So they actually didn't have a mortgage. We put $100,000 line of credit on and they immediately grabbed 40,000 because they needed to do their windows in their house, which cost 40,000, believe it or not. And then the rest of the money's just sitting there. So if they have another rental that needs to be done or take a trip or whatever the case is, they do have that money available. So did I answer that question for someone on the reverse?
And let us know if that was what you wanted to know.
Yeah, that's
Beth,
great.
oh,
Thanks.
sorry. That's good, Ann? Did you get that?
Yes, excellent.
Beth wants to know, can a parent give a child a large amount of money as a gift? It will be going from Ontario to BC.
Yes, you can. So, yes, you can. I'll do a little comma. It does depend on the lender and product that they're getting. So as an example, you can't always use gifted down payment for a rental. So if that son or daughter, sorry, I think it was a son, is buying a rental property, you may not be able to depending on the lender, but if it's a straight up just residential property, normally it's fine. There's again a couple programs that would be not allowed, but they're very few and far between. I do get asked, well, I do a lot of mortgages for people with gifts. Basically, you will be required to sign a gift letter that just basically states, I'm giving this as a gift and it's not required to be paid back. And then usually either the lender needs to see that you have the money, Beth, in your account. So what they want to make sure is that at the end of the day, the house is going to close, that we're not just taking Beth's word for it, that she has money there. And or you just need to show it deposited into their account. So that's what ends up happening with a gift.
Okay, Beth Ann, I hope that helps.
But definitely we're something we're seeing all the time now. And to be honest, that's another thing that people are doing with reverse mortgages. So they want to leave sort of, not leave, but start to do more of a living inheritance and actually be able to get to see their family in a home as opposed to waiting until they've passed, obviously is usually when that would happen. So people are doing reverse mortgages to be able to do that, to be able to give family members. We also have people that use reverse mortgages to go buy a rental property so that they can have a source of income coming in. So lots of flexibility there.
Interesting.
Mhm.
All right. Any other questions? Okay, I think Laura, I think everybody's got. They thank you very much for the informative session.
Thank you. If anyone has any questions, you know where to find me and happy to chat anytime.
That's great. And if anybody needs Laura's contact, you let me know and I can give it to you. It's also in the chat and in the daily emails. Okay, thanks very much, Laura. And
Thank you. Have a great day, everybody.
Okay, talk to you later. Bye-bye.
Bye.
Thanks. Bye-bye.